Alright, for this video we want to have a look at the federal income tax impact on your Social Security benefits. And namely, how do we calculate how much of our Social Security income is taxable and is it even subject to tax? So I've got two slides here covering some background on the Social Security benefits tax issues. And then we've got three examples here, example 1, 2, and 3, that are going to outline how these rules work and how much is going to be taxable. Now with each example we do have a sample form 1040. So we've got a sample 1 here, we've got an example number 2 for this fact pattern, and then we've got the third 1040 which we'll have a look at as well. And also we'll be covering the Social Security benefits worksheet for each to see how we calculate the taxable amount of benefits. Now, if we go back to the slides to start with, let's cover some of the background, and then we'll take a look at the fact patterns and the return. So what factors are going to impact the taxable amount of your benefits? Well, the first one is certainly your filing status, right? So your filing status on your 1040 is important because it impacts how much of a standard deduction you can get. Right. It also impacts the base rate that you have as far as what amount of your SS benefits are taxable. And so when we talk about taxable amounts of Social Security, generally we're looking at you take 1/2 of your benefits plus your other income, and if that amount exceeds the base rate, then you might have a tax implication on your Social Security benefits. And so the base amounts are different for each filing status. So $25,000 base rate for single, head of household, qualifying survivor, or married filing separate and lived apart from the spouse, or $32,000 base rate if married filing jointly. All right, so that's why the filing status and the base amounts are so important. Now, the other thing that certainly impacts the calculation is how much in benefits you were paid during the year, and then how much other income do you have from other sources, right? All of these are factors that are going to have an impact on the taxability of your Social Security benefits. Now, the maximum taxability of your benefits is limited to 85% of your SS income. So if we look at this example here, if you're age 68, you have $15,000 in Social Security benefits, but you still work full time, and this taxpayer makes $600,000 a year in W-2 income. So they're in that top income tax bracket. The amount of their benefits that would be taxable and included in income is still limited to 85%. So $12,750 would be included in taxable income. Now, there is a huge difference, and we'll see this in the example, between Social Security benefits that are included in taxable income, so they're taxable, versus whether they are actually subject to any income tax. And what I mean by that is we're going to see in the example here where a taxpayer has a taxable amount of Social Security benefits, but their AGI is still below the standard deduction, so they have zero taxable income. And we'll see that in example number 2. All right, so let's have a look at these examples, and then we'll look at the worksheet, and hopefully some of this will make a bit more sense. So in example 1, what we're going to have is we have Social Security benefits where none of it is taxable, and the taxpayers aren't going to owe any income taxes based on their overall income. So we have John and Jane taxpayer. They're both 66 years old, and they're married filing a joint return. Now the couple has $32,000 of Social Security benefits paid during the year, and then they had $3,445 investment income, which comprised dividends, interest, and capital gains. And then they had an $11,000 distribution from a traditional IRA. So their total other income is $14,445, right? The $11K from the IRA and then the investment income. So now if we have a look at their return and the worksheet, we'll see how all this comes together. So if we look at page 1, these are the items that get reported before we start to look at that worksheet. So we've got the taxable interest income, $1,095. They've got dividend income, $2,300. There we see the $11,000 taxable distribution from the IRA. and they have $50 of capital gains distribution on line 7. Now on line 6A, we can see the gross amount of Social Security benefits, which is $32,000, but none of it is taxable on line 6B. And so the way we compute whether or not any of it is taxable is by looking at the Social Security benefits worksheet. So if we're looking at this worksheet here, line 1, we enter the total amount of benefits paid from our 1099's SSA. So $32,000 comes in total from their SSA benefits, right? Now, we take 1/2 of the $32,000, gives us line 2, $16,000. On line 3, we combine all the income amounts from lines 1Z, 2B, 3B, 4B, 5B, 7, and 8. There's our $14,445 figure. So all the interest, all the dividends, all the capital gains, and then the retirement distributions that are taxable. So the amount paid out from our traditional IRA. Now we don't have any amounts from line 2A, and then which is tax exempt interest, and we don't have any of these adjustments down here for adoption benefits or foreign earned income exclusions. So the total amount of income that we have here, 1/2 of the benefits plus of our other income, is $30,445. Now we don't have any other adjustments on Schedule 1, so we just move on to line 8, which asks, is the amount on line 7 less than the amount on line 6? It is, right? So we subtract line 7 from line 6, and we're left with the same total, $30,445. Line 9, if you are married filing jointly, entered $32,000. That's us, so we entered $32,000. And then on line 10, it asks, is the amount on 9 less than the amount on line 8? And the answer is no, right? This is a greater amount. So if we hit no, we stop here because none of our benefits are taxable. So we would enter 0 on Form 1040, line 6B. So if I go back to the line 1040, look at 6B, we have a $0 amount as far as taxability of our Social Security benefits. Now, as we move on with the rest of the return, right, we still have some income here, right? We've got the investment income, the retirement distribution from our IRA, and so our total income is $14,445, but that number falls well below our standard deduction of $30,700. Now, remember, the married filing joint returns, the standard deduction is $27,700, but if your age exceeds the relevant threshold for the year, you get an additional standard deduction. So that's why we see $30,700 here instead of $27,700, right? Because both of our taxpayers are age 66, so we've checked these boxes here. All right, so now after everything is accounted for, our taxable income is 0. So we don't owe any tax, no taxable income. So in this scenario, on $32,000 of benefits, none of the benefits were taxable, and none of this income overall is taxable because it falls below our standard deduction. All right, so let's have a look at fact pattern number 2 and see how this changes up a bit. So in this one, our benefits are going to have a taxable amount, but we're still not going to owe any income taxes. So we have the same fact pattern here, $32,000 of Social Security benefits, $3,445 of investment income, but in this one, our traditional IRA distribution was $22,000 instead of the $11,000. So it's double what it was from the prior example. So how does that additional retirement distribution income impact our computation? So if we look at an example 2 here, we've got the same return, the married taxpayers, married filing joint, no dependents. They were both born before Jan 2nd, 1959. And so when we look at their income amounts down here, we have the Social Security benefits at $32,000. We have the same investment income, but on line 4B, we have taxable amount of retirement distributions for $22,000. So now we do have a line 6B amount for a taxable portion of their Social Security benefits. So how do we get this 4723 number? If we have a look at the Social Security benefits worksheet, Line 1, we have our benefit amount, $32,000. Then we have 1/2 of $16,000. And then all of our other income from the Form 1040 equals $25,445. So now our total income is $41,445, which is well above our $32,000 base amount. So now on line 10, we are subtracting line 9 from line 8. So we subtract $32,000 from $41,445, and we're left with $9,445. Question 11 asks to enter $12,000 if married filing joint, or $9,000 for another filing status, so we enter 12. Line 12 asks to subtract line 11 from line 10, which is going to give us a negative number, so we put 0 there on line 12. Line 13 asks us to enter the smaller of line 10 or line 11, so we enter 9,445. Line 14, we multiply line 13 by 50%, and we're left with $4,723. So that's going to be the amount that's taxable under these circumstances. So line 15, enter the smaller of line 2 or line 14. Well, 2 is $16K. So we're going to enter the smaller amount, which is still the $4,723. Line 16, multiply line 12 by 85%. Well, line 12 is 0, so we have a 0 on line 16. So then line 17, we add 15 and 16 together. We're left with the same value, 4,723. Multiply line 1 by 85%. So line 1 is our total SS benefits, 32,000 times 85%. Remember, that's the ultimate ceiling, right? We can't be taxed on our Social Security benefits more than 85%. And so line 19, the amount of taxable benefits under this fact pattern is the smaller of line 17 or line 18. So we're left with 4,723. So once we have our 4,723 figure, we go back up to page 1 and we enter 4,723 on line 6B as the taxable amount of our Social Security benefits. Now, when we do the rest of the return, we add up all the income items, and then we still see that our total income, our total adjusted gross income, $30,168, is still below our standard deduction. So in this example, similar to the prior one, we have taxable income of 0 and tax of $0. So in this one, we have some technically taxable amount of Social Security benefits, right, the $4,723, but overall there still wasn't any tax imposed because our income fell below the standard deduction amount. All right, so that's example number 2. So let's have a look at the last one, example number 3. So example number 3, we're going to have a taxable amount of Social Security benefits, and we're going to owe some income taxes overall, because our income is going to be above the standard deduction. So we've got the same scenario here, $32,000 of Social Security benefits, $3,445 of investment income, and now we've got $30,000 of traditional IRA distributions, and so our total other income is $33,445. So now if we have a look at our tax return, so this is going to be example number 3. So example number 3, same setup, same amount of investment income. The one change here is we have increased the amount of our traditional IRA retirement distributions. So now we have $30,000. So now we've got a taxable amount of $10,628. So let's go back to our worksheet and see how we arrived at that amount. We've got the same $32,000 figure on line 1. 1/2 the benefits are $16,000, and then all that other income is $33,445. So now our total income, so total other income plus 1/2 of the benefits, $49,445. The $32,000 base rate for our married filing joint status leaves us with $17,445 of extra income. Line 11, we entered $12,000 because we're married filing joint. So we subtract line 11 from 10 and we're left with $5,445. Line 13, we enter the smaller of line 10 or line 11. Well, the smaller amount is going to be $12,000. So we enter $12,000 on line 13. Line 14 asks us to multiply the $12,000 by 50%, so we're left with $6,000. And then line 15 asks us to enter the smaller of line 2 or line 14. Well, the smaller is going to be the 6,000, right? So line 2 up here is 16K. This amount is 6,000, so we're going to enter the $6,000 on line 15. Then on line 16, we multiply line 12 by 85%, gives us $4,628. And then on line 17, we add lines 15 and line 16. So we're adding line 15 of $6,000. We're adding line 16 of $4,628. And so our total is $10,628. Line 18, that final check for total taxable Social Security benefits, 85% times line 1 gives us $27,200. And so the last line item here is asking us to enter the smaller of line 17 or 18. So the smaller amount is going to be $10,628. So $10,628 is the taxable portion of our Social Security benefits. So we enter that figure back on page 1 on line 6B. So we have $10,628 is taxable out of the $32K. And then we've got all our other income items here. Interest, qualified dividend income, taxable amount of IRA distributions, capital gains. So our total AGI is $44,073. We have our standard deduction of $30,700. And we're left with taxable income of $13,373 and tax of $1,103. So in this example, we can see a scenario where, okay, based on your other income, you have a taxable portion of your Social Security benefits, and then you have other income items which push your overall income over the standard, so you do have some tax liability on your income. All right, so that covers it for this video. I hope that was helpful. If you have any questions, feel free to leave a comment below. And as always, I appreciate you watching, and I look forward to seeing you on the next video. Thank you.